Did you know what is interesting recently? We realize many foreign investors today are no longer looking at KLCC only. Frankly speaking, this was not that common previously. In recent years, we have noticed some foreign investors actively exploring places like Johor Bahru and Penang as well, especially with Johor Bahru RTS link connecting to Singapore expected to complete by the end of 2026. So compared to before, where many foreign buyers mainly focus only at KLCC, today investor interest is becoming much wider across different parts of Malaysia already. Because last time when foreign investors think about investing in Malaysia property, a lot of attention actually goes straight into KLCC area. And after meeting quite a lot of investors from the past, we realized buyer behavior in the market has actually changed quite a lot compared to before. Not weaker market, but definitely more selective. Hello everyone, this is Cindy here. In this video, I just want to share some real observations we have genuinely been seeing on the ground lately around KLCC and prime KL property market. First thing, we definitely notice inquiries today are slower compared to before. Especially after all the global uncertainty lately, people naturally become more careful with how they place their money these days. But interestingly, it doesn't mean buyers disappear. In fact, serious buyers today are still actively searching. The difference is, buyers today are much more targeted. They know what type of property they want. For example, I prefer only a 2-room unit. What budget they are comfortable with, what strategy they are aiming for, either holiday home purpose, long rent or Airbnb, and what kind of holding risk they can accept and what is not. Investors today even spend months observing before they even making a decision. Another thing we notice is that many investors today are no longer looking purely at short-term rental strategies. Perhaps because global travel demand is not as strong as before and flight costs remain relatively high compared to previous year, today, many investors are paying more attention to long-term rental demand instead. Especially sectors that continue expanding in Malaysia such as AI and technology-related industry, data center, medical tourism, international students, and multinational companies setting up operations here. Because at the end of the day, investors want rental demand that can remain sustainable through different market cycles. That's why we see more buyers looking for properties that can potentially deliver stable rental return while still being attractive enough to stand out from competing units in the same area. Which in my opinion, it feels like a much more mature market compared to purely emotional buying before. Secondly, this is actually one of the biggest changes we noticed recently. Last time, many foreign investors mainly focused only on KLCC, Bukit Bintang, TRX and city center areas. But now, more investors are starting to explore suburban luxury locations too, especially areas like Bangsar, Damansara Heights, Mont Kiara, Desa ParkCity, and Bukit Jalil. Because compared to KLCC, this area can sometimes offer bigger space while lower entry pricing, stronger live-work-play lifestyle, greenery environment, family-oriented living neighborhood feeling, and integrated township convenience. In fact, convenience is becoming one of the biggest factors influencing tenant demand today. Many tenants are increasingly willing to pay higher rent for locations where they can reduce their dependence on the driving. Being able to walk to the office, shopping mall, public transport, restaurant, groceries, parks, or daily conveniences has become a major advantage. And because of that, many investors today are paying much closer attention to integrated township development compared to before. Because if tenants genuinely enjoying living there, rental demand tends to be much more resilient over the long term. For some investors still love KLCC location and lifestyle, they need to know the fact that the entry price in price per square feet will be still higher. For investors that have ready budget, KLCC is still a very attractive location. As for some people today, they may think that since they already spending this amount of money, maybe I want a bigger space, an area that local would like to go around as well. So the buyer interest today is becoming much more diversified compared to before. Third, investor today ask very different question compared to before. Today buyer ask things like, is the rental demand sustainable? Is the maintenance fee too high for long term? What is my exit strategy? How many similar units nearby? Is the management good and reliable? Is the view permanent or will be blocked in future? Is this property easy to replace if I decide to sell next time? Investors don't follow trend anymore. They are thinking much more about holding power, the risk management, and long-term sustainability. And buyers today are definitely doing much more homework compared to before. Lastly, in today's market, we also come across more foreign investors today prefer a completed properties because they can immediately see the actual units and the view, experience the actual surrounding, check the actual management condition and finishing of the building, and of course, to know the market latest actual rental demand. There's definitely much less uncertainty involved, especially in KLCC market where pricing is already premium. Buyers today want stronger confidence before they even commit anything. And surprisingly, some investors today don't even mind paying slightly higher price per square feet if the project already gives them certainty, compared to buying based purely on future imagination. Of course, under construction projects still have opportunities too if the developer have strong testimonial from their past completed properties. But overall, we definitely notice completed projects becoming much more attractive again recently. At the end of the day, I personally don't think the KLCC market is becoming weaker. I think buyers today are simply becoming more selective and more thoughtful with where they place their money. I think this may actually be healthier for the market in the long term. Because today buyers focus much more on quality, holding power, location strength, livability, and long-term sustainability. And moving forward, I think projects that are harder to replace, better managed properties, and located in stronger neighborhoods will continue standing out even more. If you really need a good advice on property investing in Malaysia in 2026, feel free to reach out to me, follow and subscribe us for more ground experiences. See you on my next video. Bye bye!